welcome back. You're watching The Money Show, and let's get on to our viewer queries section. And today I have with me Pankaj Mathpal, MD from Optima Money Managers. Pankaj, good evening and welcome to the show. Let's get connected with our first viewer. Mr. Balaji from Chennai. Mr. Balaji, thank you so much for sending across your question. I think we couldn't take your question yesterday, so thank you so much for coming back online today as well. You have a portfolio where you're investing in Mid Asset Mid Cap. You have a Parag Parikh Flexi Cap, you have a Quant Flexi Cap, you have a Quant Small Cap, and you have UTI Liquid as well. Is that right, sir?
Yes, sir. Yes, madam. Yes, madam.
Okay, perfect. So you are looking at a retirement corpus of 3 CR in 7 years, and you also have 25 lakhs. Do you want to invest that particular amount also in equity, the other 25
Yes,
lakhs that
madam.
you
Yes,
have?
madam. Yes, madam.
Okay,
Much
okay.
more. Yeah.
Okay. So because the duration is only 7 years and we are talking about
7
your
to 10 years,
retirement,
maybe 7 to 10 years it can be,
7.
madam.
Sure, sure. Okay. Sir, are you aware of the risk that because you have an equity-oriented portfolio except for one UTI liquid, but apart from that, you are invested in mid-cap, flexi-cap, and small-cap. It's a retirement corpus. Even though you have a time frame of 7 to 10 years, you know, where the risk might just get mitigated, but are you aware of the risk involved in equity as an asset class per se?
Yes, madam. That is my next question. Actually, should I invest in some debt funds, gilt funds,
Right.
or also? I thought, yeah, yeah.
Yeah, true, true. Okay, you are looking at 3 crores from this particular investment portfolio. Any particular SWP or amount that you might need for your regular income from this 3 crores amount? Or is just
Yes,
one lump sum
madam.
corpus that you want to
After
accumulate?
at the age of 60, maybe 2034 or 2037, I may be requiring 50,000 per month from as
50,000 per
SWP, madam.
month.
Yes, madam. Yes, madam.
Okay, okay, all right. So let's do one thing.
Yeah.
Let's keep your 3 crores target on hold because we are
Yeah.
talking about having 50,000 every month after the age of 60, which is almost
Yes.
after 7 years now. Okay, so
Yes. Yes,
let's
madam.
take this particular goal and let's help you understand how much you need to invest so that you
Yes.
know you can draw 50,000 every month till say maybe 20-30 years. You might have to you are also ready to invest 25 lakhs more, so that's one aspect which also we might want to consider in our planning. So Pankaj, slight change in the in the planning as you might have already heard. All right, so how can you go about it?
Kavita, good evening. See, Mr. Balaji, if you are expecting that your money should grow to 3 crore in 7 years, so it means your investment has to grow at 25% CAGR, which may be possible, but still it is a highly optimistic target. But as you mentioned that you can go up to 10 years, so it is okay. And from time to time, if you can increase your investment, that will be helpful. Second thing, as Kavita mentioned just now, that instead of considering the 3 crore or whatever at the age of uh, 60 for retirement, instead, like you said, you want 50,000 per month. If you expect 0.5% every month from your investment, it means if you have 1 crore rupees and you get 0.5% return on that, it means you get 50,000 rupees per month, which is quite possible. Second thing, because over a period of time, your expenses will grow and you will need more amount. If you start at 50,000 per month initially, you will require more every month going forward. But still, the way you're investing, and as you want to add 25 lakh more to this, I expect that you'll be able to achieve your target. So do not focus on 3 crore, 4 crore, whatever. The basic thing is that whatever investment you have, whatever money you have, it should grow to beat the inflation. And if not 25%, some 12-15% you should expect. And with this expectation, you should manage your portfolio. So as right now you have all equity schemes, I will suggest that you should have some hybrid scheme in your portfolio, not debt scheme, because ultimately objective is to grow your money. So first thing, the schemes which you have right now are good. You should continue. This liquid fund, what you have in your portfolio, maybe that for your contingency you want to keep it, but it will not help you in creating wealth. For contingency, you can keep the money in this fund. And for this 25 lakh rupees, I'm suggesting you some schemes. See, one, as I mentioned, hybrid scheme. So ICICI Prudential Multi-Asset Fund, 15 lakh rupees you can invest in this. This is a multi-asset fund, means it invests in equity, debt, as well as gold. So that can be a good scheme in your portfolio. And balance that 10 lakh rupees, you divide 5 lakh each in the existing funds in your portfolio. One is that fund, flexi cap fund. You already have investment in this scheme. You can top up that. And in addition to this, Parag Parikh flexi cap fund, that also you have in your portfolio. So you can top up that with 5 lakh rupees. So for 25 lakh, I have told you three schemes. I have suggested three schemes, and rest of the schemes are good in your portfolio.
All right. Mr. Balaji, is there anything else you want to ask Pankaj?
I have already Nippon multi-asset fund in my portfolio. Still, you want me to add ICICI multi-asset?
You have
Uh,
Nippon multi-asset. You said
Yeah,
Nippon
yeah,
multi-asset? Because that
yeah,
detail
yeah,
we
yeah.
don't have with us. Okay.
Oh,
Pankaj, you already
sorry.
has
I'll
a
send.
multi-asset, he says. Not a problem,
yeah.
sir.
So yeah, you can add, you can top up that on. If you already have one, I didn't have information. You can top up that fund.
All the best, Mr. Balaji. If you have any further queries, do send across your question once again. Pankaj, let's move on. Let's take Harish's question. He says that he. All right, we have Mr. Harish on the phone line with us. Good evening, Mr. Harish. Thank you so much for sending across your question. You are calling from?
Yeah, I'm calling from Hyderabad.
All right. Hi. Okay, you can ask your
Hi.
question. We can hear you.
Yeah, okay. So here is the thing. I took a home loan from Bank of Baroda Home Advantage loan. So
Okay.
from that loan, from the savings account, I can withdraw how much amount I want. So I'm trying to withdraw 25 lakhs from the savings account. So I would be having an interest of 8.8 on those 25 lakhs.
Sure.
Now I want to
All
invest
right.
those 25 lakhs in mutual funds so that I get an interest rate greater than 8.85. So can you suggest a method to
Sure.
get an, I hope the question is understood, right?
Yeah, of course, of course, of course. Pankaj, he's taken a home advantage loan from Bank of Baroda. He's trying to withdraw 25 lakhs, so the interest applied by bank will be at 8.8%, and he wants to invest that money to generate more than the bank loan rate. Okay, so what is going to be your answer for this?
I'll say it's not a good idea because you're withdrawing,
Sure.
you're taking a loan practically. You're taking a loan and then you are investing that money. So not it may not be a good idea. Though I can say that to invest that money in some large cap index fund, Nifty 50 funds, and you may expect returns better than your loan, what 8.8 you told us. But still, I'll say that you should not do that. Instead, means whatever after paying that you pay EMIs, and if something is balance you have for investable surplus, I mean you have that you invest, but do not take loan and then invest it.
All right, Harish, is that clear? Do you want to ask anything?
Yeah, that's fair. I have one more question. Like, can it be for a long-term horizon, like considering for a 10 to 12 years, I will not be touching that amount?
You want to invest at 25 lakh, is what you're trying to say.
Yeah.
Okay. Are you comfortable with equities?
Yes, comfortable.
All right, Pankaj.
So if 10 to 15 years the horizon, then I'll suggest you multi-cap funds like Kotak multi-cap fund or ICICI Prudential multi-cap fund can be considered. So multi-cap fund and large and mid-cap funds like ICICI Prudential large and mid-cap fund, Motilal Oswal large and mid-cap fund. So such diversified funds can be considered for 10-15 years investment horizon.
All the best, Harish. And let's move on. And we are trying to get Mr. Siva Kumar on the phone line. But till the time we get him on the phone line, let's take up his question. Pankaj, you also might be having the details. Tata Balance Advantage Fund, Tata Digital Fund, Tata Business Cycle Fund he's investing in. He has Canrebeco Small Cap and Mid Cap. He's got Franklin Dividend Yield. Time horizon is above 5 years. That's all the information we have, and we don't have him on the phone line yet. Pankaj.
See, funds are good, but there is one thematic fund, Canada Tata Business Cycle Fund, and one is sectoral fund, Tata Digital India Fund. So, as he mentioned, that more than 5 years, but I don't know how long he wants to stay invested. So, I'll suggest that portfolio should be diversified. Means if you can skip these funds, Tata Digital India and Tata Business Cycle Fund, and invest only in diversified equity funds that can be a better choice. And so I'll suggest that he can replace this Tata Digital India Fund with the Tata Large and Mid Cap Fund. Business Cycle Fund is still okay because it invests across the sectors, across the market cap. But specifically, I'll suggest that Tata Digital India Fund can be replaced with Tata Large and Mid Cap Fund.
Don't have him on the phone. Otherwise, I wanted to know why he accumulated, more than one fund from one particular AMC. Now, let's also help our viewers understand as to why is it important to have the right mix of AMCs. You know, even if you're talking about good funds from one AMC, we might be having most of the best performing funds from one particular AMC. But how right it is to have all of those funds in your portfolio?
Kavita, it is very, very important that you should diversify across different fund houses. The reason is that one is philosophy of the fund house, because most of fund house will have some investment philosophy. Some follow our investment style mostly, some follow different approaches. So when you invest across fund houses, you get the benefit of different investment philosophies, different approaches. At the same time, because when you invest in one fund house, mostly that fund managers will also have their own investment styles. So if you want to get benefit of styles and approaches of various fund houses and fund managers, it is better that you invest across multiple fund houses. You must have seen that sometime when you invest in all different categories of one fund house, and during a particular period, none of their funds are performing well. So better that you diversified it. And when you think about diversification across sectors, it is also important to diversify across fund houses.
Right, right. All right. With that, it's time up on the show today, Pankaj. Thank you so much for taking time out and helping our viewers understand and answering their financial portfolio queries also. And I'm going to leave our viewers with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.